All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to go over 3 new ETFs that haven't been around for a long time that you could possibly invest in to generate passive income and potentially see some nice returns in the future. Now, remember, none of this video is going to be financial advice. This is all just informational and educational, and I'm going to show you guys what these new ETFs are, and we'll also go over their performance and compare it to some other things such as the stock market, as well as Bitcoin and cryptocurrency. Now, these are all 3 bond ETFs that are going to be writing covered calls against the underlying ETF. So for HYGW, what they would do is they're going to be writing, aka selling call options that would reflect against HYG. So, all of these are all bond ETFs themselves without the W, and the W is just going to reflect writing covered calls. So if you take a look at the performance, HYGW has performed the best out of all of these. It's down about 7.3% since inception. LQDW is down about 14%, and TLTW is down about 15.69%. Now, we're going to start off here with LQDW and go over what it is and some of the different basics about it. Now, why would you choose LQDW? Well, there's the potential for enhanced income, right? This may provide enhanced income compared to traditional U.S. investment grade bonds by selling monthly covered call options. And the traditional U.S. investment grade bonds ETF would just be LQD itself. 2 is going to be diversification. This fund may outperform the underlying fixed income ETF in periods of rising rates and widening credit spreads. Now, remember, I said that these ETFs were new, and in the past year of 2022, this is the exact type of environment we were in, where we had rising interest rates and widening credit spreads, which I believe is a reason that they put together these 3 ETFs. Now, the third reason is going to be easy access. It offers convenient and cost-effective single-ticker access to a custom options overlay strategy on the U.S. investment-grade bond market. Now, you can also take a look at the holdings for all of these. They're typically going to have about 4 holdings, and they break it down here. You can see the market value, the weight, and much, much more if you go to the website and dive in a little bit more. Now here we can see all of the fees listed. Okay, they go over all of the different fees. The fees are not very expensive compared to some other ETFs, but they're also not the cheapest necessarily either. But I think that they are pretty fairly priced. Now, the investment objective, okay, the iShares investment grade corporate bond buy right strategy ETF seeks to track the investment results of an index that reflects a strategy of holding the iShares iBoxx investment grade corporate bond ETF while writing, aka selling, 1-month covered call options to generate income. And you can go over the key facts here, such as the Bloomberg index ticker, all right, the asset classes under fixed income, the inception August 18th, 2022, shares outstanding, different things like that, okay? And if you take a look here, this is the dividend history, and you can see that the dividend does vary, and a large part of this is due into the fact of them selling the call options, right? So depending on how much premium they get and how much premium they're collecting from writing these call options is going to affect the monthly dividend payout. All right, now the hypothetical growth of $10,000, if you invested those $10,000 since inception, you would be down about 5.31%. Now, let's go back a little bit real quick. And if we take a look at the actual performance of LQDW since its inception, it's down 14.04%. So why would this be only negative 5%? Well, the reason being is that the hypothetical growth of the $10,000 chart reflects a hypothetical $10,000 investment, and it assumes reinvestment of dividends and capital gains. Fund expenses, including management fees and other expenses, were deducted. So remember, a lot of interest in these is going to be the dividends in it, right? And so this chart is assuming that you're reinvesting the dividend that you're getting. And you can see here that it changes you to about a negative 5.31% if you assume the reoccurring investments, reinvestments of dividends and capital gains into this fund. Now, the next one, the next chart we're looking at is going to be LQDW versus LQD itself versus the stock market versus Bitcoin. And, we have Bitcoin right here in yellow. We have the stock market here in orange. And you can see that those have outperformed both LQD and LQDW since the inception of this ETF. Largely, this is in part to a tremendous rally in Bitcoin as well as the stock market since the beginning of January in 2023. We've had one of the strongest opening months of January historically in the stock market, and Bitcoin itself is also rallying very tremendously. But yeah, so even LQD itself is outperforming and is down 3.54%. And even if you're assuming reinvestments, you'd still be down about negative 5.31%. On versus the 14% here on LQDW. Now, the next one is going to be the HYGW. This is the high yield corporate bond buy right strategy ETF. And we'll go over some of the same things as well. 3 reasons why you would choose. The potential for enhanced income may provide enhanced income compared to traditional U.S. high-yield corporate bonds by selling monthly covered call options. Diversification. This fund may outperform in periods of rising rates and widening credit spreads. Remember, that's the type of environment that we're currently in right now, and that we were in 2022 when these funds were, basically made. Also, easy access, convenient and cost-effective single ticker access to a custom options overlay strategy on the U.S. high-yield corporate bond market. Now, very similar to the last one, okay, it's got about 4 holdings in it. It breaks down the holdings by market value, weight, asset class, sector, type, etc. So full transparency in those things. And you can also look at some of the key facts as well as the investment objective, which is very similar to the last one, except instead of investment grade bonds, this is going to be the iShares iBox high yield corporate bond ETF while writing, aka selling 1-month covered call options to generate income. Now, if you take a look here, HYGW, if you would have invested $10,000 at the inception, and assuming that you are reinvesting the dividends and capital gains with fund expenses, including management fees and other expenses deducted, you would actually be up 1.51%. Now, similar to the last one, the dividend payout does tend to change and tend to vary. It's not always going to be stable, again, due to the fact that it is largely based upon how much income they can generate from writing those call options. Now here we have a similar chart. Okay, we're looking at HYGW versus HYG versus the stock market versus Bitcoin. And we can see HYGW is down 7.3% since the inception of this ETF, with HYG only down about 2%. But if we look at the previous chart and assume those $10,000 investment strategies, okay, you can see that you would actually be up 1.51%, whereas the stock market is down 1.42%. So you would actually be outperforming the stock market if you were doing those reinvestment strategies that the $10,000 investment chart assumes. Now, Bitcoin, again, still is outperforming all of the classes, all of the assets on here and equities. We'll move on to the next one, which is going to be TLTW. And TLT is one of the most popular bond ETFs there is. And a lot of the investment objectives are going to be very same, as well as the reasons why you would choose TLTW. Again, you can provide enhanced income compared to traditional U.S. Treasury bonds by selling monthly covered call options. This fund may outperform in periods of rising rates, and it's very easy access with convenient and cost-effective single ticker access to a custom options overlay strategy on the U.S. Treasury market. 4 holdings in here as well. Breaks down all of these holdings. You can take a look at the key facts as well. And the investment objective, again, is to track the investment results of an index that reflects a strategy of holding the iShares 20-plus year Treasury bond ETF while writing, aka selling, 1-month covered call options to generate income. Now, this is their dividend history. Just like the last ones, it does vary from month to month from each payout. So definitely always keep that in mind. And if we look at the growth of a hypothetical $10,000 this would be down at 7.82%, assuming the same thing that we've been assuming in the last one, that reinvestments of dividends and capital gains with fund expenses, including management fees and other expenses, were deducted. Now, if you take a look here, TLTW is down about 15.69% since inception. TLT itself is down 9%. The stock market down about 1.42%, with Bitcoin up about 14.81% since the inception. So, a common theme here is that, these W ETFs have not necessarily outperformed the underlying ETF. In the case of HYGW, it did. But when you take a look at TLTW and LQDW, those two have not. So, it's just some new strategies that are being brought about, some new ETFs. And if you like the idea of dividends and receiving these dividends, then possibly some of these ETFs could be good for you and your portfolio. Remember, none of this video was financial advice, but rather just informational and educational, and trying to bring some exposure to some new ETFs that were created relatively recent. They haven't even been out for a year. And there's not a huge amount of money necessarily under management yet, but that could continue to grow as time goes on. And, as they are able to get more money in there, they'll be able to sell more covered call options, and, potentially generate some more income. Just depends. But thank you guys for watching. I really appreciate it. If you enjoyed this video, make sure to smash the like button, subscribe to the channel if you guys are new, and I'm out.